Let me tell you a story about a near disaster while creating my latest trading platform. It was the night of January 9th, 2025, and I was working on preparing my software for public use. It's too much to get into in detail, but I ran a test that accidentally placed some live orders. Maybe it was because I had been working around the clock, coupled with the fact that things were changed so fast. Whatever the reason, at 8:13 p.m., I found myself short one crude oil call. Ironically, I had caught my mistake and aborted the software before it was able to place the short put order. So my inadvertent position ended up fully bearish just before crude oil started an extremely bullish run. Just my luck. Similarly lucky, I got into a short strangle in the S&P futures. Little did I know that those futures would be down nearly 2% the next day. But there is a happy ending. You might even call this a story of good fortune. I ended up working into the wee hours that night. In fact, it was nearly 4:30 a.m. when I closed the oil call for a $110 loss. I'm glad I did, since oil was up over 5% on Friday. The call I sold for $70 was worth around $2,000 at one point on Friday. I decided to hang on to the ES strangle and went to sleep for about 4 hours. I woke up bleary-eyed and was forced to make some quick adjustments. The S&P was down enough in the morning that my short put was down nearly $400 when I rolled it down to a lower strike. However, as you can see in the leftmost column showing the quantities, those zeros also show two calls that I rolled down, locking in profits as the price dropped. The gains on the calls were offsetting the loss on the put, though I was still down about $130 in total on the S&P. 9 minutes later, the total S&P trade was showing a small profit, though I still had the $110 loss in crude oil to make up for. The roller coaster ride was not over, though. It's worth pointing out how far the market was from my short strikes. The market was 92 points below my call strike and 123 points from my put strike. There's always a move you can make to improve your position, but I will say that it can be a lot to handle manually, especially when you are working on code to automate this whole process, and never intended to be in this trade at all. Another thing in my favor was the theta, time decay, of the options I sold. I've got $266 of theta working for me today, as long as volatility and price movement don't overwhelm it. I've also got an 85% probability of profit on each of my short options. By 12:37, the overall position is up over $200, more than making up for the loss in crude oil, as well as commissions and fees. The initial $400 loss is more than made up for by my current open position, combined with the gains I've already locked in on the rolled calls. 15 minutes later, it's up to $280. By 1:32 p.m., I had rolled the short put up from $57.50 to $57.95, locking in a gain of almost $500 on that one put. Overall, the position is up $300. At 3:07 p.m., it's up $390. I thought I was home free. I was hoping for over $400 profit on the ES trade. Heck, maybe on the whole day, including the loss in crude. Unfortunately, 12 short minutes later, $200 of that paper profit have evaporated. This market was not done. Even though these options don't expire until next week, I'm not going to hold over the weekend after a Friday like this. I'm looking for my exit. Just before the closing bell, I'm back over $300, thanks in part to rolling another call, locking in nearly $150. In retrospect, though, it was a little late in the day for a roll. I would have been better off closing out here. But that's part of the challenge of doing all of this by hand. Automation could have done this far more efficiently, not to mention all the time and energy saved. Friday afternoon is a seller's market. The prices rise because people like me who are looking to close out their shorts are forced to pay whatever the sellers are asking. I watched my profits dwindle as I tried to get out at a favorable price. Instead, they kept rising even as the S&P held steady. Nonetheless, I ended the day with a profit and lots of insights into how to automate this. It was a wild and woolly day, far out of the ordinary, with crude moving over 5% and the S&P 1.67%. Considering that a mistake put me into these positions, naked options no less, I'm pretty pleased to have made money on such an outlier kind of day. As you can see, it was software that filled all three positions at 8:13 p.m. At 4:24 a.m., I was up and working on the code when I decided crude oil was more than I wanted to tangle with. Had I been in a short put as well, I might have hung on. That would have been quite a day, manually juggling naked strangles in both crude and the S&P at the same time. Software could have done that. I'm glad I didn't. Here's my first roll of an ES call, locking in the first profit. Price was dropping so fast that I rolled that one for a profit only 13 minutes later. 5 minutes after that, I rolled the put, locking in a $400 loss. A few hours later, I was able to turn around and roll that put, locking in a gain of nearly $500. This was that call that I rolled late in the day. It did work out okay, and I made a little money on it, but it may not have been the wisest move. Waiting until 4:45 p.m. to flatten the position was definitely not a wise move. My final profit would have been at least $100 more if I had flattened the position around the closing bell. The final result, though, was a green day overall, and that's a good thing. There is nothing better than selling options. If you'd like to see how you can have this automated for you on a daily basis, visit tradeunafraid.com/smooth-equity. We are still offering special pricing for a very limited time. We will be in beta as soon as next week. You don't want to miss this.